Good evening, everybody. Welcome back to another One Big Journey stream. Welcome, everybody. So tonight you got Jordan, you got Will with me. So we're going to be touching base on a few things. You'll notice their regular faces. They're going to be showing their faces a lot more around on the stream. So yeah, Jordan, how's your week been, mate?
Yeah, good. I mean, it was a very bullish week for me. Very green, and even better, I took some profits in a couple of positions. So making unrealized gains into actual cash in your account is always nice. But outside the market, also really good week as well.
No, good man, good. Will, how's your week been, mate?
I think generally same as you guys really. I did make a couple of small sales as well this week. I haven't bought anything. Just monitoring the market. Everything's been pretty bullish, hasn't it? Everything's been pretty green. So yeah, man, all good.
That's good to hear. So yeah, look, so we've got a stock heat map open here. What's your views so far on year to date for what's happening on the stock heat map, lads?
Super green. Super green. I mean, I think we've seen a couple of rotations. We've seen some rotation out of the mega caps and into others. We saw, I shared in the Discord, there was a day when finance was hit a little bit hard, but then tech was up, and then finance made a comeback. I think as overall things have been really green. We've seen, as I say, money flow to and from different sectors, to and from different sort of types of stocks, but more money flowing in than out, it seems, for sure.
A lot of the I think a lot of the retail darlings have done well so far. A lot like the high beta names have done quite well. Some of which aren't even in the S&P 500. But definitely I've noticed there's sort of a certain small caps, certain mid caps which are doing really, really well this year. I think some are even sort of 20, 30, 40% already. So yeah, it's been a really sort of good start for high beta.
Yeah, and I mean, it's interesting to see because I know we was just touching on it a bit well beforehand. Stocks like Amazon up 7% already, which is crazy to see. I mean, you've got the likes of Cat up 7%, Google obviously doing Google type things, and obviously you've got Walmart up, Costco's up quite a bit. So yeah, it's interesting to see some of these names already into January very high up. On the back of that, obviously, we're going to touch on some of the news that we're looking for going into the following week. So I will pull that up now. Stop screening. There we go. Share screen. So we're going to pull up the Discord and we will run from that when it wants to show itself. Where's it gone? Entire screen. Doesn't want to show itself, boys. Let's go. There we go. There we go. Right. So obviously this week we've got the credit card stuff going on Monday, but we'll leave that. We'll come back to that. We've got CPI inflation data on Tuesday. We've got the new home sales data Tuesday. PPI inflation data, Supreme Court's tariff expected ruling. So that, again, it was meant to be Friday, but we'll see exactly how that goes. Got the Fed manufacturing index. So what's your views on next week? We've got a lot of data that's coming there. We've got a lot of stuff that's happening. Obviously, we'll touch back on the credit card stuff, but we've got a lot of data next week. So things could get bumpy. Will?
Just on the December CPI inflation, I think it's the first month where we're getting a true reflection since the government shut down, since Trump cancelled one of the months, etc. So I think it's good to get that kind of raw December data without hopefully any meddling or anything untoward going on. So that should be quite interesting. Although the Fed's preferred data is a PCE, so it's important, the CPI, but I don't think it's mega important, to be fair.
And what do you think about the inflation data, like the PPI? So yeah, like you say, the PPI and the CPI that we got this week. George, what do you think of that? What do you think is going to happen this week?
I'm not sure what I expect from the numbers. I think similar to Will, I'm looking forward to hopefully getting a nice continuous flow of data without interruptions. Like with the second half of last year, or the last quarter especially, it felt like either we had data delayed or data cancelled or data that came out and then later there are corrections and stuff. So just to have some, just on the as a face value, some continuous data, a nice flow of data, like a sequence of it, to get back to normal a little bit and to have a little bit more stability and sort of be able to lean on it more, because it's felt like it's wobbled a little bit towards the end of last year especially.
Yeah, no, That's totally fine. And I think, like I said, people are looking at this data. I think obviously a lot of the data is going to be keeping a lot of people's eyes. But I think obviously the big thing that's going to be going on is Monday with his 10% credit card rate cap. George, you want to share your screen with that, and we'll touch on that while you're touching it. So, what's your views on this, Will? Where do you think your head's at with this, especially with
Yeah,
stocks like SoFi?
yeah. I think it's quite a complicated one. I think it was one of just Trump's crazy kind of Truth Social posts. So I think people need to sort of know where it came, know where it came from, if you like. So Bernie Sanders tweeted, I think on the day and Friday, what happened to Trump's 10% cap on credit cards? And then hours later, after the market shut, Trump sort of blurts out on Truth Social, well, basically, and now we're going to do it, and we're giving the banks 10 days to sort it out. So you can kind of see probably where it kind of came from, where he just thought, oh shit, yeah, like I did say that, and this year is the midterms, and I need to kind of show that I am keeping my promises. So I think first of all, knowing where it comes from is important because then we sort of have to think, well, is it actually going to happen? And if I had to say yes or no right now, I don't think it will happen. Trump did just propose for it to be 12 months, starting in 9 days now, which just doesn't seem possible. It doesn't seem well thought through, although I do definitely agree that, people shouldn't be having crazy high rates on their credit cards and certain companies being really, really greedy with it. I just think it's such a massive change to the US credit policy where 10 days just isn't long enough to get it sorted, basically. I think if it did happen, I think a lot of people would be left without access to credit. I think the high FICO scores, 740, 750 and above, which is pretty high, they should be fine. But people lower, they're going to really struggle because in the US, it's even more credit heavy than here. People use credit cards a lot. Like there's a credit cards for every single shop you can think of. There's like some massive credit cards there. And then also people are using Dave, people are using like these various I can't remember what the actual word is, but basically you kind of get your paycheck 2-3 days early and they take a little bit off it. So there's like companies like Dave doing that. There's also Klarna. There's a firm which is like the buy now pay later. So US is very consumer credit heavy. People like their credit and people use a lot of credit. So would putting down the 10%, would putting the cap of credit cards to 10% basically remove a lot of people from having access to credit cards? Yes, I think so. So therefore, where would they go? So as I said, I think that the other options for them are possibly worse because the other ones have higher interest rates, and they have more risk attached to them as well. The reason why I think the credit cards companies would cancel a lot of credit cards for people is because they just wouldn't be making money off them. I think about 55-60% of people in America do pay off their balances every month, but that 35-40% basically prop up the rest of the market. The reason people are getting these massive benefits of airport lounges, restaurant vouchers, cashback is because of people who pay interest every single month. And these high credit card rates, sort of 35%, they're not really intended to be sat there for 12, 24, 36 months. Like, if you do need to delve into that, the idea is that you're paying interest for 2-3 months. But unfortunately, a lot of people are paying a lot of interest. So would the high FICO score people who are capped at 10% still want the credit card because they can't offer the bonuses, can't offer the cash back? So like, there's a lot of like moving parts. But to bring it back to a little bit more based on kind of like the stocks we like, there's sort of been like a debate on Twitter this weekend about whether this is bullish or bearish for SoFi. In terms of SoFi's credit cards, they don't make much revenue from that. I think it's 3-5%. They make a lot of their revenue from the loan platform business. And when they are selling loans, a lot of their loans are for a consolidation loan. So people have got into debt from multiple credit cards at 20, 30, 35%, and they're putting it into a SoFi loan at 12, 13%, and they're paying it off that way. So it saves on the monthly payment, and it saves on the interest spiraling. So that's like the bearish case, because you think, well, if the interest rate on the credit cards are a lot lower, what's the need for the credit card? What's the need for the SoFi loans in the first place? Because there's no point consolidating them, because you may as well carry on paying on the credit card. But it goes back to my point before about, will a lot of people effectively not have access to a credit card? And this is kind of the position Anthony Noto took as well. Over the weekend, he put out a tweet about it. And essentially, he's saying, well, there's going to be effectively millions of people who don't have access to a credit card. We can offer them one of our personal loans. And because we're a nimble, like a smaller business than a JP Morgan, than a Bank of America, than a Citibank, we can effectively take advantage of these massive amounts of people who now need access to credit, although it will be via effectively a bank loan as opposed to a credit card. So it will be more difficult to use and more difficult to. I think one reason why people like credit cards is because they're just so easy. Whereas if it was more like a bank loan, I think it needs more planning, it needs more understanding. So overall, I think I'm leaning to it could be an opportunity for SoFi if it happens. But yeah, I think it would just change the reason why people are getting the SoFi loans.
Yeah, no, I think that's a very good take. And like Timmy said, it's an interesting topic that most people haven't looked into. And obviously, like people who are investing in SoFi might think, obviously, like you say, it's only 5% of their business model having the credit cards. But like you hit the nail on the head, if they're not taking out consolidation loans, then it's two products that's being affected instead of one.
It's their main product, yeah.
Yeah. Well, George, what's your take on this? I know you've got something open here. Like, do you want to run through what you've got here, and like, what's your take on this?
To be fair, I think Will covered most of it really well. I was going to say similar things, and I'll sort of try and shorten it down, so I'm just repeating the same stuff that Will's already said. But I saw a really interesting breakdown from someone who was sort of trying to establish if they thought that the 10% cap would be bullish or bearish for various different stocks. And it was breaking down a lot what Will's just said about if you're putting a 10% cap on all of these lenders, they're going to be looking at their riskiest borrowers thinking, hang on, the risk of what we lend you is still the same, but now the reward has been brought right down and capped at 10. And we talk about risk and reward all the time. So their risk has stayed the same and their rewards come down. So the likelihood is, as Will said, a lot of people are going to be cut off and denied access and lose access to credit. And do these risky borrowers, do these sort of constant spenders stop spending all of a sudden? Probably not. So they're going to look for another option and look to get access elsewhere. And as we were alluded to, probably that becomes one of the main things they might shift to is buy now, pay later schemes. So does that become something bullish for PayPal and stocks similarly that offer buy now, pay later options and services because of that change and that loss of access to the credit? Overall, I'm probably the same opinion. Do I think it's really going to come into place? No, it seems like too big of a change. And I think there's, at least on the American side of things, on both sides of their political world, there'll be people who aren't happy with it, both Democrats and Republicans, etc. And I think there'll be too many barriers and too much pushback for it to happen, especially as we'll mention in the time frame that they're proposing. So I don't think it would happen, but if it were to, I think it is bullish for some companies, and I think there would be a shift from credit to buy now, pay later, but it would be a pretty monumental shift for America. And again, as Will already said, their culture of credit is huge. So for something that big to change is pretty significant, and I'm not sure that it changes in such a quick and short time frame.
So yeah, touching on that, which obviously we're going to pull yours back up in a sec, George. You can keep yours there because I've got it there. So obviously the market's going to react to this on Monday. Obviously, like you said, this came out late Friday. Market didn't have time to react about it. We've got the banks, which we'll touch on the earnings in a minute, reporting next week. So how do you think that the market will both react to this on Monday, and how do you think stocks like SoFi and stuff like that, and equivalently stocks like PayPal, etc., will react to the news?
Yeah, well, I kind of wish that the market was open when this True Social post went out, because I think it would have been good to see the straight reaction. But also, selfishly, I think there would have been some opportunity to buy the dip there as well. And because there's been like the buffer of the weekend, I'm sure like the stocks we're talking about here, JP Morgan, Citibank, SoFi, Hood, will open 0.5 to 5% lower. But I think we probably missed that massive shock because people had time to digest the news over the weekend. Because, when I first saw the headline, I was thinking, damn, like that's not going to be good. But as you sort of go into it a bit more, and you kind of have hope in like the leadership teams of a company like SoFi, you do hope that Notos can navigate a change like this. And I think also Trump put out 4 major True Social posts last week. Well, many more, but 4 major key policy changes. I think this might just get lost in the air a little bit. It might just get lost in Trump's rhetoric. So I think it will be very interesting seeing how like the banking and the fintech sector open tonight and then obviously tomorrow properly. But I think we may have missed like the massive hit on certain stocks.
I think that's fair. George, what's your take on that? How do you think that we're gonna touch on Monday when it opens?
Yeah, I think the exact same. I think having a whole weekend to digest does reduce and take out a lot of the sting, if you like, and the volatility. Still be some movement. I'm not sure whether that will be immediately down. I mean, I think had it come out on a Thursday, had it come out middle of the day, market still open, that sort of thing, there would have been an immediate drop as like the most first reaction, and then a bounce back from the information really being digested and really thought out of how it might really come into place and what the implications and impact of it might be. So I do think as well that the volatility will be muted tomorrow slash tonight than it would have been on the Friday. And it depends how much action there is in retail. So I think institutionally there wouldn't be too much change to big credit and big lenders. I think it'd be more the retail's reaction. And I think, as I say, hopefully the weekend digesting that will mean actually there's not too much of a reaction as what you might expect from such a big sudden headline on a Friday.
Yeah, I think everything with Trump is always such an interesting timing. I think obviously he always times what he does, how he feels timed his best. And again, like you say, it might be something where his plan was for the market to digest it over the weekend. So no panic happened because obviously he's trying to keep the market up as high as he can. But at the same time, it's very interesting that he has done it the week before the banks are reporting earnings as well. So there is, like you say, a give and pull with that. Will SoFi drop a little bit on open, or well, even after hours when it opens? Possibly. Do stocks like PayPal and like you say, you're paying out stocks pump a little again, maybe. But it's all about what actually happens, and because people saying stuff's going to happen and sending out posts and actually doing something are 2 very different things. It's not easy to just say, yeah, that's the cap and that's what's happening. So that is that's what I've got to say on that. Have you boys got anything else you want to add on that, or is there anything else you want to touch on with that?
Yeah, well, I just want to say that I think it also, I mean, to remember that Trump is not like, I don't think he's fully in bed with the banks, but JP Morgan, Capital One, a Citibank, Bank of America, like these CEOs are friends with Trump. Like they've been to dinners with him in the last few weeks. So he's like I'm very much sure that he's had calls this weekend. He's spoken with people. Certain banks have reached out and basically asked him not to do this, and maybe given their thesis why he shouldn't as well. So like I think that maybe that True Social post was sent out in like a bit of a haste, but then over the weekend I'm sure some like the big banking guys have sort of spoken to him and sort of asked him to rethink a little bit. And also I just wanted to make clear, so I mentioned how we sent out 4 sort of major True Social posts just this week. So it was the one we've mostly talking about, the 10% credit card cap. It was the one about banning major institutions from buying houses.
I've got that to touch on.
Okay, cool. It was the massive increase by 500 billion into the war budget, and that is generally affecting the stocks like Raytheon. And then all the stuff with about you want to pump more oil from Venezuela. And these were like major true social posts. And I think if we saw these in January, February, March last year, there would have been a massive reaction to these because these are all major news, like increasing the defense budget by 50% is massive. But I think people have got a little bit not tired of his post, but there's just so many that, and you know that he often goes back on them. So I think that the overall market reaction is a lot more subdued than when it would have been 12, 18 months ago.
But would one argue that that's actually a good thing because it shouldn't be as volatile to a tweet as what it is? And like you say, one tweet that comes out about, I don't know, slagging off Elon Musk or talking crap on China or anything like this, and the market reacts crazy.
Yeah.
And I think that comes into the case of nowadays with investors because this year, obviously, a lot of people have seen gains that people are making. So a lot more retail's coming into it. I mean, I talk to a lot of people on trading 2-on-2 communities all the time. And obviously, a lot of the things that they say on there is, I didn't realize the market was like this. I didn't realize it was this volatile. I mean, they are in stocks like Ondas and that, for instance. But there's like, I've started investing in September and it's so volatile. And because there's millions and millions of people like that with scared money, there only has to be some type of skepticism, and everybody panics that April's going to happen again, and a lot of money starts getting dragged out, and then all of us, like I said, that's where a lot of the volatility comes. I mean, how do you? Obviously, this week we've got we've got all the banks reporting, so earnings season officially starts this week. What do you guys reckon? Do you think, George? Do you think this is going to be bullish? Then these guys are all going to smash Q4. What's your point on it? What's your take on it?
We may see one of those situations where we see good earnings, because obviously this is post Q4. If we see good earnings, but the, let's say, forecast on the market sentiment means or almost cancels out good earnings. We've seen it before where stocks have a beat, but maybe the CEO has said something a little bit concerning about continuing to post the numbers that they've been posting, or a little bit of uncertainty in the market. And I think we had that. Actually, I can't remember. It was one of the stocks we've got followed in the survey. They had really good earnings, but the CEO had said something about unsure what the next 3 years might look like because there's so much uncertainty and so much that we don't know yet. And so, although they had great earnings and they beat on most of their expected numbers, that kind of cancelled out, and we saw a bit of volatility. You know, the share price immediately jumped on good earnings, but then as the earnings call went on and people spoke and some of that sentiment changed, it sort of dropped, and then eventually it sort of came back out and it had gone flat from before earnings. So being completely cancelled out, and maybe we see the same sort of thing. Maybe we see some great Q4s, but stuff like this makes the near term look a little bit less promising, and it almost cancels out any boost that the earnings give them.
What's your take on this, Will? How do you think that the banks are going to perform for Q4? The forward, obviously forward guidance, etc. How do you feel about it?
I would just say I'm probably I think at this moment I'm probably more interested what their comments are going to be around the 10% credit card thing. I think in general, I'm sure they'll do really well in their Q4s. Like they've been performing super well over the last couple of years. So I haven't got too much to add really. I just will be looking out for quotes on the credit card news.
Yeah, no, that makes sense. And obviously, going on the back of this, before we've got the week of the banks. After this, we start. Oh, that's a bit too zoomed in. We start touching on obviously everything else. The week after, we got the likes of like Netflix, etc. Then we're going really into earnings season. So it's quite how detrimental do you think that the banks starting this off? Let's say there was bearish towards it because of the 10%. How do you think the sentiment's going to affect the rest of the Q4 earnings season?
I don't think it's going to have much of an impact, to be fair. I think all the results are going to be really good. I think we'll see the banks do really well again. And I think it'll just be a few questions from the press and stuff about the 10% credit card stuff. But then I think overall, the sentiment should be strong. And as I said, like even though we're talking about this now, by the time next Sunday stream, like we could not even be thinking about the 10% credit card thing. That's how quickly like these things kind of move. So in general, I'd probably say I'm bullish. I think the banks will set up a nice earning season. And yeah, I mean, 3 months goes by very quick because of how spread out everything is. Like it is kind of a crazy thing. Like we're back doing earnings again. 'Cause it does come around quick, but I'm pretty positive, really. I think the market's set off really strongly this year, and I think going into earnings, that can give like a nice catapult to sort of continue the run, and also it will mean that certain stocks can grow into their multiple because we have like the new data as well. So yeah, I'm feeling good.
Yourself, George?
Yeah, so maybe I'm not bearish going to this earnings season at all personally. I think we'll see good numbers. I think we'll see some right online. I think we'll still see some beats. We saw loads in Q3. I think Q3 was one of the best quarters for quite a while in terms of the percentage of those that performed and released numbers above expectations. I think for the moment, the market, especially the US market, feels more tech dominated and tech heavy, and big hitters like Nvidia, how they post and what they say, affecting the wider market more than the finance stocks do to an extent. Yeah, as I was just saying a minute ago, I think potentially what people will look into more with these earnings aren't the numbers, but it's the rhetorics, and as we said, what CEOs and what finance chiefs and executives, etc., comment on, and what they sort of guide and talk about, and the questions that analysts ask them and how they respond to them, they might be listened to and reacted to more than the actual numbers, because there seems to be so much change and big news and big proposals coming out at the moment.
No, I think you both got solid takes, and I think we're in the same type of mind space with it. I think we'll have a solid Q4 from a lot of stocks. I think a lot of stocks will have a lot of Q4 dominance, and again, I think we're going to keep going into a solid year. Wednesday, obviously, we've got a tariff decision in court on Trump. Well, hopefully, because it was supposed to be Friday, it's been pushed back to Wednesday. This US Supreme Court obviously rule, and it's expected for Wednesday. Where's your head at with that, Will? What's your take on this, mate?
Yeah, again, it's a bit of like a complicated one, because I think, well, the market never liked the tariffs. The market has hated the tariffs. Like if you look at last April, I know at that moment we didn't have quite the mindset that when Trump says something, he doesn't probably mean it, because at that time we sort of really believed him. But the market reacted terribly, awfully, to Trump holding up a whiteboard. I was sort of thinking about this. I was thinking about this week. Like nothing actually happened. It was just the threat of them caused the market to drop 20%. So the market has never liked tariffs. I think there could be an initial small pump when if the decision goes against Trump, which I think it probably will do, I think the market will see a small pump up, but that should give some clarity. But I think then Trump will come in and then use other mechanisms to get most of the tariffs back, which will then create more uncertainty. But overall, I do think that the whole tariff situation, it's not a nothing butty, if we're going the 1 week rate. I don't think it's a nothing butty, but it's definitely not 2025 April either. It's important. It will move the market. We'll need to listen to his comments, but I haven't got any fear, any FUD in me right now about this. We'll just see what happens. The market will react how it react. I think could overall even be possibly positive. The main fuckery, if you like, if it does go against Trump, is actually a refunding the money as well, refunding the tariff money. That could cause some issues. So it might be some short-term volatility, but I don't think this is something to really worry about, especially as a long-term investor.
I mean, my personal take on it as well is even if they deem it illegal, obviously we've seen a lot of them come out. We've seen a lot of his press team talking about it. They'll always find a loop around it. I mean, George, what's your take on it, mate? What do you think?
Yeah, I mean, I think the current prediction at the moment, isn't it, is that and it makes sense as well that they will find something about it overall and discourage, but in terms of refunding, probably not practical and probably won't be something that they'll proceed with. I think that's what a lot of people are expecting at the moment. It does sound really overly complicated and detrimental to a wide part of the US and US market to go through that whole process if they do overrule it, to then look at the process and how to run through refunding all that. So agreed on the volatility of people digest what it actually would mean if it's overruled, and then again more if when they do confirm that any tariffs up until this point, tariff money collected etc won't be refunded, it will just go and do as promised and feed into the payments I've already mentioned to different US citizens etc. It's weird. I've said this a few times, like just reflecting more generally, it's crazy to sometimes sit back and reflect and look at the sort of market and the environment that we're in and what we're getting almost weekly, it feels at this point. Like these are big talking points, big topics and things that affect the markets massively. And as Will said, from just the whiteboard being held up, I think part of that, the big reaction that we saw there was no one had really predicted it to be as widespread across as many countries, was as many high rates as we saw. And when sort of people got a little bit more clarity on what was actually being proposed and thought up, panic started. And as you said, like we said on the Christmas stream, it's such a reactionary market that we're in at the moment. And again, I still think that it's one of the most reactionary we've seen for quite a while. Having all these constant big headlines and big changes, creating so much volatility, it does create opportunities for us. You know, you see massive dips on great stocks that in most years you wouldn't get as many buying opportunities as that. And wherever there's volatility, obviously there's opportunity as well. So something to be grateful for, but it definitely makes for a bit more work to keep up with everything as an individual investor, and I guess makes stuff like the Discord even more valuable to have at your fingertips, to be able to have all of that condensed into one place.
Yeah, and I think, like you say, stuff like this, which we'll touch on, the fear and greed, fear creates opportunity. So, I mean, if the market pulls back, let's say we have a reaction to it, I mean, you just do what you think is right. But I mean, I'll be buying up any dips that present themselves. I've put myself in a position that I expected January to be a bit volatile. So far, it hasn't really been. So obviously, again, we don't always get things wrong, but there's a lot of data coming out this week. There's a lot happening this week, to be honest. And we've got the banks, we've got all of this news coming out. So again, like I say, it's more of a strap in, and let's enjoy the ride for the week, I guess. Do you two have anything else to touch on that before we move on to the next, or?
Good.
No,
Good. Right, yeah. Right then, George, we'll go back to what you was doing then, because you've got a few things you want to share with us, don't you? So if you want to share away, mate.
Can you see my screen now? Yeah.
Yeah, you're back in control. So anything you show on those tabs, you'll show.
Cool, perfect. So yeah, just back to the trading view stock heat map that Jay showed a little while ago. For anyone who doesn't already use this, please do. I'll just quickly look just at the year to date that we've already had, and obviously so anyone who's not already used this, the darker the reds, the more red the stock's been, the more it's gone down. The darker the green, the more it's gone up. So it's a color scale and shows all the big stocks, how they've moved. And just looking at year to date to see some of these values already.
Just grab my parcel from the door, guys, because the Amazon left it by the door. So I'll be 2 seconds.
No problem. To see some of these changes already after 9 days is crazy. So we've already seen a lot of change this year. But something I shared in the server last week, and something that's interesting to look at. Just look at the occasional life if you're investing in the US market. Just looking at the past year as an overview of the biggest stocks across the S&P, and just looking at some of those numbers and looking at actually how much of the split and the share of those stocks are green, just goes to show how good of a year we've had recently, how good the past 12 months have been. You pick any one of these, almost every one of these green stocks, and you've beaten the S&P. So last 12 months was a great year to be in individual stocks. I mean, of course, one of my favorites, you see Google there, plus 70% in 12 months is mental. Palantir just below it, 160. Nvidia at 30. Apple and Meta sort of around about the same as the S&P, but then Broadcom at 50. JPM at 35. Like, it was a really, really green year, and it just goes to show actually how to an extent how easy it was to grow your portfolio over the past year. I say easy a little bit loosely, because you still have to pick good stocks. There's still red stocks on here. You still definitely could have lost money, and investing in individual stocks is still the same risk as it always has been. Of course, when things are green and when years are bullish, they can go really green for individual. Will, I don't know if you have any reflections on it at all.
Yeah, I think it's just sort of continuing on what we've been saying over the last 5, 10, 15 minutes, where there's been so much has happened over the last year or so. And I know that in some people's minds, particularly when I'm not in the server, maybe talking to people in real life or maybe on X, where some people are still like very overly bearish and negative. We actually have had a great year. I know April was scary. I know April was drastic. I know post the 10th of October wasn't the best. But overall, we've had a 16-17% year on the S&P 500. We've had, what is it, 22%, Jordan, on the FTSE 100?
Yeah.
So like we have had a good year. The market's done well, and as you and as you just showed, some stocks have done absolutely fantastically. Some really big, like fairly obvious names as well. So.
And then
yeah. He like stopped then, like his mic cut out. Just finished.
Oh no, sorry. I just finished there.
I just went and got that parcel off my doorstep because Amazon. I literally live on a main road. I did it earlier as well, so I've had 2 today. They'll put it literally resting up against the front door, take a photo, and just dip. I'm on a main road, like people walking past. Like there's no, like, do you know what I mean? Just take a photo, like yeah, I'm out of here. Don't worry about. Bear in mind, the bins are next to it. They could easily have put it behind a bin, but hey, it is what it is. Right then, Joel, what you got next for us, mate?
Cool. So yeah, as Will's just said about the FTSE, those who invest in the FTSE themselves be well aware, but it doesn't get as much attention at all from the S&P as the S&P does. It's not as flashy. The sort of expectations aren't as high, but the last 12 months were really, really strong for the FTSE. I know Jay and Will are going to be doing a stream in the near future going into ETFs and stuff, so I won't talk too much on the breakdown of the FTSE, but it is quite a global fund, if you like. A lot of its revenues come internationally. So as much as UK investors, sometimes you might feel pretty bleak about our own economy, our own country in different ways. It doesn't always correlate directly to how the FTSE does, because it is to some extent a little bit disjointed from the UK economy, because so much of its revenues, and I think it is about 80%, about four-fifths of the revenues come from outside the UK. So even if the UK is not doing too well, the FTSE can be really strong. And then if we compare for that past 12 months, so
just while you're on that, Jordan, I want to touch on a quick question before you go off that, because I've never asked you this question. I think everyone will understand it as well. Obviously, people know me and will do. Do you invest in an ETF yourself? Do you invest in this stuff? How important do you think ETFs are? I know me and Will are going to touch on this in a future stream, but how important do you think ETFs are, or do you think individual stocks are just the way to go? What's your view on it?
Yeah, so I do invest in ETFs. I've said this a few times. I have the way I build out my portfolio is I have my individual growth stocks. I also have sort of anchors on the side of it, and by anchors I mean those that are there they might not have the same high reward potential of growth stocks, but when things are a little bit more bearish, they give some stability, and give a bit of like a safety net almost to the portfolio. So my anchors are investing in the Max 7, or investing in sort of large cap value plays, which Google for me over the past 2 years was that. It was a huge company that I didn't see going anywhere whatsoever at a low valuation, so it felt very safe. So to me, I class it differently as an individual stock, an individual to a growth stock.
And sorry to put in again there, George, just a quick one, because you've got a lot of value to add to people, because a lot of people call themselves investors. Sorry to put in again, mate. A lot of people call them investors, but investing is actually holding something for a long duration of time. And this year's created a lot of traders without them actually knowing it. A lot of swing traders, and that's myself included in some stocks that I've done. I've got, like you said, some of the stuff that's my anchors that I've kept and have not moved at all. My SOFIs, my stocks like that, my ETFs. But yourself, you've invested in Google. If you don't mind sharing for everyone, how long have you actually held that stock for so far that you haven't really touched? You haven't sold any, have you, or anything? So
yeah, I've not sold any since I've held it. I think around about 3 years since I first bought some. Lots of buying, like in the past 12 months especially, because there was those big dips that to me were such a great opportunity that I can pass up. And again, as we said in the previous stream, the timing of the April dip to when our ISA reset to have more capital, again, just tied in with the Google dip and buying up more. So about 3 years in total.
And people didn't really just get the April dip with Google. They sort of got like a 4-month dip with Google, because then it went through the turmoil it did with Apple and other stuff like that. So obviously people had a lot of opportunity, and it went, was it 165? I think was around where lowest was. Was that roughly around where its lowest was?
I think so. It might have been a little bit lower than that.
That's what I
It
mean.
went up 140 actually.
Yeah.
It hurts me, that does, because I didn't. And again, this is again why I think having a network of people is such important, because it's not about telling people what to buy, but it's about when these opportunities slap you in the face, you should really absorb them in. And you and a few other guys, Jordan, I know you was, Will, and I know there's a few of us talking about Google, trying to educate people on it. But a lot of people were so romanticized by all of the smaller caps, by all of the other stuff doing so well, that Google sort of didn't get much love. And it sort of just ran in the background. People who knew were smart about it was lapping up the shares. And obviously the people that did lap up the shares have doubled in share price in the last 6 months. Do you know what I mean? So it's been a great investment for everybody. But if you don't mind, you ain't got a shout as well, Joel. What type of ETFs do you invest in?
So I've got a split. So up until recently, I did have a lot in the FTSE. I've had that for a while as well. So since I first started investing, I've had money in the FTSE. But I've sold it just as a shift of portfolio a little bit. I needed to free up some cash. I've got some in, I had some in iShares as well. So like a higher exposure to tech stocks, but that's also gone now. Most of it now for me is in ACWI, so the All World Index. My SIP is in that. I've got some external funds in the ACWI as well.
And I think, like I said, we'll touch properly on this in the future. The ETFs will, like ACWI, FTWG, ETFs like these, they're so good to, I think when all these flashy stocks are in the way of your Ondases, your Googles, your SoFis, your AMDs, your Palantirs, like these ones that have your Nvidias, the ones that have seen a lot of growth this year, it's easy to get mixed up. And like you say, Jordan, which I like that term, having no anchors. What do you think on that, Will?
Yeah, I think it makes total sense. I think one of the reasons why a global index fund is so powerful is because you can use it in so many different ways. You can just hold it and do really well. You can hold one ETF and do really well. You can hold 40% of your portfolio in that, and then invest in SoFi, Hood, Apple, Nvidia, whatever, and then maybe someone like the smaller growth names as well. And then at least you've got that backbone, like the kind of like insurance play, right? So if you mess up some trades, investments, or if things underperform, you've got the global market just to keep ticking over and ticking over. So there are many ways to use it. I love having it. I think it's a great thing to have to sleep at night. You just know that a lot of money is just in the global market, and obviously it has the risk of being in equities, but if something drastic were to happen to that, then the whole world would be in a massive recession or something, right? So I'm more than happy to hold it. I think it's a great fund. I like the split as well. And I think it can work for a lot of people as well, not just as a boring retirement investment. I think it can work as a really good anchor.
No, I agreed. I like that term anchor as well, Jordan. I'm going to put that one in the notebook. Yeah, Jordan, carry on, mate. Sorry to butt in and disturb you.
No, good. So I was going to say, so funds as an anchor as well, of course, and then cash as an anchor. So sort of 3 separate anchors, or if you like. I think I shared like a really crappy edited image once. If you imagine like a big ship at sea and all the cargo containers, like the growth stocks and the high risk stocks, and then you've got 3 anchors coming off of it, and you've got funds, at least in my approach anyway, funds, cash, and then more value plays in sort of higher cap stocks like Google, but I won't count Google as that now because it's less of a value pick than it was a year ago, that's for sure. And then so just again going back to the FTSE and then looking at the S&P. So on this chart, the FTSE is the blue line. This is looking over the past 12 months, and the S&P is the orange line. Obviously, the S&P for new investors as well. One of the first things you hear about is invest in the S&P, leave your money there. an average of 8% returns a year to be expected over a long period of time, etc., etc. And the S&P is sort of picked up as the golden market to be in and the only opportunity, etc. And just goes to show that for over a long period of time, sure, I think the S&P is undefeated over a long period of time, but it doesn't mean that other markets and other funds and other options can't also be viable and can't also perform well. And you can see here that the FTSE 100 over the past 12 months vastly outperformed the S&P. Although, of course, has less following, less traction, less attention. As I say, I did close out my position myself just because I wanted to shift around my portfolio a little bit, free up some cash. It'd been a long-term position already. It was nicely in the green. But would I be happy to hold it still in other sort of circumstances? Yes, I'd still be happy to have that bit of a balance in a similar way to what Will said about having an all-world fund, having some FTSE 100 to complement having quite a lot in the S&P 500. Always felt like a nice balance, and especially because I've not had too much exposure to finance side. Yes, and to me, the FTSE 100 is quite heavy on the finance. So when finance does well, typically the FTSE does well as well. So that's a big part for me. I don't know if you two have any thoughts yourselves on the S&P versus FTSE.
Yeah, and I think, see, this is again, which it depends on a plan on how you do it. So my S&P 500 last year, I think, did something like 16%. And people will go, well, Jay, how did you 16% if it only did 5.34? And it's because, again, it's between lump summing and having a plan. My plan is I invest every Friday. So naturally, I just probably bought at better opportunities, but I wasn't timing it. It's just my plan. Some people might buy it once every month. Some people might buy it once every quarter. Again, it's about a plan. But like you say, people overlook a lot of the other funds because they think the golden goose is the S&P 500. Now, I know a lot of people actually prefer all worlds, so I'll let Will jump in and take over from there.
No, what I think I was going to say in terms of like the FTSE 100, I like the FTSE 100 because it's priced in pounds. And I won't go too much into this now because I think we will touch on it in our other stream, Jay. But one reason why I like having a small allocation to this is because there's no FX. Like, there's nothing which can affect it outside of like the market for me. Because in Germany and France, people who are investing in the S&P 500 in 2025, obviously are there in euros. I think their 2025 was something like 1 or 2%. That's how much the euro to the dollar swing was. So the S&P 500 returned in dollars about 16-17%. In pounds, it was about 6-7%, was it? And then in euros, it was about 1-2%. So it does show you that currency does play a part, and currencies over time even out. And generally, that they do revert to the mean over a very long time period. But it's almost as like a slight hedge. I think being very, very slightly overweight to a home currency, so in our case pounds, is a good thing, and that's why I do buy a very small amount of the FTSE 100.
Yeah, no, I think like I say, all ETFs, well, not all, that'd be a bit far-fetched. Some of these key ETFs, your FTSE 100, your ACWIs, your All Worlds, your S&P 500s, all hold their own value. So I don't want to touch too much on these subjects because I want to touch on them, but not too much because I know we've got a lot to offer on it, and we will.
Sweet. Yeah, cool.
Right, yeah, enjoy. What's your next one, my mate?
So the next one is a little known stock called Ondas. So of course, Ondas, you're invested in with yourself, big following on the server. I've got some Ondas as well. Crazy week for Ondas. Let me just switch to the 1 week. And you can see there, like plus 24% in 1 week, and that's after a week which was plus 29. Like it's had a crazy run. Of course, some really big news coming out on Ondas. Jay, I was going to leave this mostly for you to as Mr. Ondas to some extent. Anything that you wanted to talk about specifically on this stock?
Yeah, so again, this week it's been a crazy week again, as always. There's a lot of option contracts on this. There's a lot of volume coming in. I think last week it was a top traded stock twice. I think one of the days or 2 of the days it overtook Nvidia as well on most traded volumes. Yeah, it's crazy stock. I've had a great opportunities with Ondas to speak to some of the executive staff, some of the people. So I feel very fortunate that even sometimes I can text these people and just talk about the market with them. It's great. We've got another interview coming out this week. No, sorry, not this week. In about 3 weeks with another Ondas Capital member. So that's going to be a good. But yeah, Ondas is one of those stocks. But it's important to understand when people are buying. My favorite day of the week. How you doing, Aidan? So it's important to understand with stocks like this that they're very high beta. And obviously, I have people commenting on my threads all the time, and they're always saying, I remember the whole journey through the year. We'd have good news come out and it dropped 10% and it would drop 20%, and people would talk trash on the stock and they would say it's this and they would say it's that. And obviously, we had a big retrace when the government had a shutdown. People obviously thought that this stock has gone to crap, but really the fundamentals haven't changed. Nothing's changed. They've just done another raise, so they've just raised another billion. That's with a B. So the financial sheet is looking tidy. This will, from some very educated people who I speak to on this stock. I've got the blessing of talking to people who have been investing in this stock a lot longer than me, and I talk to them on a daily basis. It has become a little bit of a trading vehicle now, so we will see a lot of volatility going forward, especially after the closing. It'll be very interesting to see how the closing finishes. I think we all know that it's going to be completely lapped up. But yeah, I think Ondas is a great stock and a great example that stocks like this do come around, and they come around quite often. So don't be worried about FOMOing in and just buying. They're calling it the next Palantir. I think they need to chill out a little bit. But obviously, things like the Palantir, the things like your Ondas, they come around, and it's about really understanding what you own. And Ondas is such a complex stock because it's now become a company of 10 more companies, and it's such active, and there's news every day, and there's a lot. And to be honest, even myself, it's a lot to keep up with, and I spend a lot of time in there. So having something like the Discord where all the information gets put in there, we've got such a good community. But yeah, I think Ondas is going to be a great stock. I think even in the future, my PT was 20. Still at the end of this year, I still think we're definitely going to see it. Do I think we see some volatility on it this week because of the DGI? So I've got to read more into it, but there was some DGI news that came out on Friday as well. So that about some of them not being banned, etc. So yeah, I do think next week we might see again some up and down on Ondas, but no one really knows what's happening with this stock. I see people commenting all the time. Do you think this is going up? Do you think this is going down? Anybody that tries to predict that, they're off their head, aren't they? So, I mean, Will, do you hold any of this, or did you not get any of this?
I did, but I actually sold this week, and that's just a personal reason for me. Is that when I'm investing, even though I like to talk about the market, I like to follow the news. I don't like to keep I don't want to keep checking my portfolio, and I found that with that stock I was. So on one of the times it had its one of its particular spikes, I sold and I made a lot of money, and I'm happy with that. But I actually think you're doing it like a bit of a disservice, Joe. You said that these stocks come around often. I don't think this sort of stock does. I think that's why so many of us are interested. I think that's why so many people are really into it. Is because this great opportunity is out there, but they're not super easy to find. So I think this is maybe like a 1, 2, 3 year kind of opportunity where maybe every couple of years you might come across this kind of stock. So I think it's a great company. I think it's a very interesting stock. I'm very happy to have made money on it, and just because I've sold doesn't mean anyone else should. So,
and again, like I say, I had a very big holding in this, and I have still got a significant holding in this, but I took a lot of profit getting in this stock at 179, selling shares at 980 and 15 is just crazy. To like 10x.
It's great returns. Yeah, it's absolutely fantastic returns.
Yeah, that's what I mean. And to be fair, I still get some hate on people list online. They're always trying to hate me on it, but it comes with a gaff. Like I say, at the end of the day, never be afraid to take profit, never be afraid to sell stocks or take it or whatever. No matter how bullish you are on something, we're all here to make money at the end of the day. Jordan, did you take any profit on this week, or what did you just holding firm?
Yeah, I did. So I think I got some at 14.96 or something like that. So when it sort of first spiked up to 15, I took a little bit of profit, not a huge amount. I think similar to what Will said, had it been other stocks, I may have taken more of my position away as profit and realized those unrealized gains. But to me, I do sort of feel the same way about Ondas being a rarer opportunity than most of the other ones that I'm sort of looking at or have currently. And so on that basis, keeping more of my position for longer than I typically would, just because I think it has so much more potential and reward than the average sort of stock and average sort of position I'm in. So took a little bit of profits. As I say, it's always nice, and same as you like, making money is making money, and confirming that and then getting that cash. So it's no longer just a potential number. If you click sell now, it's an actual number that you have sold at and have realized those gains. Of course, is what we're here for, and it's such a nice feeling.
Yeah, and before we move on from that, that's what I think it's important about. No matter, this stock could go to 50, it could go to 60, but I think your price targets are there for a reason. It doesn't, like, if you get greedy, you end up losing money. Don't ever, like I say, man, it's about money, making money. It don't matter if you make a tenner, don't matter if you make a 50 grand. Just take your profits when you want to take profits, ignore people's noise, stick to the plan. And that's exactly what I've done. Like I say, I had 12,000, just some odd shares or something. Still got a significant holding, but my portfolio swinging 50 grand every other week wasn't in my taking. So yeah, I took some of that off the table. But yeah, fantastic stock. But I could talk about this one all night, so it's probably best we move on.
Cool. So just quickly looking at a tweet.
It's ironic you pulled this one. I've got this one too.
Yeah. Cool. So
if you want to click the image, George, if you click the image, it'll put it up better.
So I think in the Christmas stream, when we said about markets, what sectors sort of looking into next year and beyond, a few of us said and mentioned about energy. Obviously, what we're seeing with the AI rollout or the infrastructure, the massive demand for new infrastructure, and the rate that we're seeing that being put out, and that obviously the capex being spent to roll that out. What feeds all of that and what fuels all of that is, of course, energy. So just a tweet here looking at what the actual power demand currently is and what it might look like, and of course then implications and thinking what that might mean for the energy sector. So the tweet is just that AI and data center electricity consumption is set to double by 2028. Data center power usage is expected to surge 650 terawatt hours between 2025 and 2028 to a record 1,230 in 2028. Just huge jumps in energy consumption, huge increases in energy demand. And of course, supply and demand is what creates a market and what creates price movements. Where supply gets constrained and demand explodes, price usually does too. So, I mean, the AI side of things and the massive increase in data center usage and power is my main reason for being bullish on energy, of course. I can't remember if Jay, you or Will mention anything about the energy sector going into next year. Is it something that you're looking at? Are there any stocks that you're thinking you might want to look into and how they might capitalize, how they might be affected by the AI boom that we're seeing?
I've been really stuck on this. I'm not going to lie. I've been looking for an energy stock for the last probably like year. It's something that we all have our strengths and weaknesses. Healthcare and energy are my weaknesses, and I do not know where to put my money. As you'll see on the board there, I don't know if you can see, I've got SMR with a question mark. Is something I've been looking at, something I've seen in the Discord, something I am taking into consideration. If people really don't understand how this power works, and you're like, I don't really understand it, I really started to. I've been in Nebius for a while, and I still didn't really get it. But when I started researching Hive, and I really started deep diving into that, and I thought, wow, this smaller company is eating a city's worth of electricity. What are these big companies doing? And where's it going to come from? And eventually the American consumer is going to start feeling that. Obviously, people like Hive, they're in different countries and stuff, but eventually the consumer of the countries are going to start feeling that. And once they've got to come up with a solution fast. And again, I ain't touching on politics about Venezuela comes into play and other things for the US and stuff like that. But yeah, data is going to become a real bottleneck problem for data center players and crypto miners and anything like, I think cloud servicing, everything, I think obviously requires all these data centers. The energy is going to become a problem at some point. And yeah, I want to be in that, but I'm really struggling to find exactly where I want to put my money into. What's your view on that, Will?
Yeah, I think I'm a bit in your boat, mate. I'm not totally sure on what the right stock is for me. I think overall it's going to be oil and gas. which mostly meets this demand of power. I don't think there's a renewables totally ready. I know nuclear is obviously up and coming in terms of like the small, small modular reactors, but I can't see this massive amount of power being met in any other way apart from oil and gas. One thing which happened this week was that Meta strikes a deal with nuclear startups to meet AI demand with TerraPower and OKLO, the ticker, Oklo. So that's interesting, where it looks like they're going to partner directly with these nuclear companies. These are the pre-revenue ones, to basically try and directly get power as opposed to it coming from like the whole grid itself. I think that's possibly the way it goes. I'm not sure what you think, Jordan, but do you think maybe that's like the way it goes is these data centers are connected to their own source of power rather than it coming from like a whole grid?
Yes, I'm pretty sure most data centers, or at least the big new ones, they are built with backup generators, like these massive generators that are there purpose built for if anything happens to their main energy supply, they're able to do that themselves. And I wonder if that may become a thing, that if data centers are just needed, they're critical national infrastructure and they have to happen, then they'll just continue to go down that route of massive generators, which obviously, as you mentioned, comes to the oil side of energy generation. I think as well, gas is the most obvious and easiest thing for them to scale up to meet that demand. I agree that renewables are nowhere near, and I don't think they're a solution anyway. I think that's why we're also seeing a lot of news and a lot of talk about nuclear and a lot of endorsement from the political side in America of nuclear, because long term that makes the most sense. Short term, oil and gas can fill up that gap and increase to help with the demand. But long term, I think it has to be nuclear. It seems the most obvious solution for sure.
And I think what people don't truly understand as well is with these data centers and energy grids and stuff like that is they can't just, like we can, plug a plug socket in and use as much electricity as you want and pay a bill at the end of the month. They have to get allocations of it as well. So it has to be allocated. So if they can't get an allocation of said power, they can't expand any further. So it's an important thing to watch out for on earnings calls and stuff like that. Earnings presentations with the stocks you're in, of what power they're actually being allocated and where they're getting it from. Because if they're not, then obviously you're going to be hitting a stone wall.
I think it's no coincidence that we're seeing the murmurings and the mentions of more investment in domestic uranium enrichment within the US. A lot of that feeds from this, I believe.
Yeah, agreed. What else have you got for us there, Joe? Because I know you've got to shoot off shortly, so I want to make sure that we get everything in that you wanted to touch on.
Yes, it may feed into, I know what you wanted to talk about in terms of the mortgage bond buy. Again, another big piece from last week's news from Trump, the 200 billion sort of rapid insert, and there may be stuff that you've already planned to talk about. So I'll just very quickly run through. So effectively, if something like that did go through, as far as sort of my opinion on it would be, and we've already seen mortgage rates in the US. I know this is US.
I haven't got this one, by the way, George. So carry on. I haven't got this one. So run away with what you need to do.
So what it might mean from a market standpoint. So we saw an instant reaction there. Rates dropped down to 6%. And I think historically, in recent memory, they've been sort of 7%, 8%. So quite a big and sudden drop off of something that is being asked and requested and proposed rather than actually something that's happened yet. But I mean, if rates did stay at those levels, if they have dropped down and they stay at those lower levels, what you're going to see is people who in America who've taken out a fixed term rate mortgage, or they've got a short term mortgage and they're at that 7-8%. All of a sudden, they have this opportunity to be in the money to refinance or remortgage their house at a lower rate, a low interest rate, and then regain some capital. So, will that long term become a increased consumer spending because there's more deployable spending from consumers? There's another side of it, which is just reducing interest rates. Is it going to indirectly increase the demand and the buying of houses, which then brings the house buying prices up on average, and actually then cancels out the savings they were making on those interests, the mortgage rates anyway. So it's sort of a bit of to and froing, as there is with many things, of how will it actually land. It's sort of like a spectrum of results, and whereabouts in the middle of that will it be, and will it be completely cancelled out by both sides of the argument? I think another benefit is in the short term, if it were to go ahead, you would see a positive impact on the inflation rate in terms of it coming down, because it'd be at a lower cost in that overall inflation number. So maybe it will feed in positively to future and more Fed rate cuts by 0.1% or 0.25%. Of course, it all feeds into that wider number. It's quite a manual and direct and intended sort of artificially created environment in that sense, where they're artificially injecting all this cash and bringing down an inflationary number. But on the flip side, it puts a lot of pressure on the Fed as well. There, I think, from what we can see in recent news and recent ways that they have decided and acted on stuff, they're trying to be quite cash tight at the moment, and 200 billion is obviously a lot. So does it time with what they want to do, and does that actually ultimately stop it from ever going ahead? It's very early on, like it's something that they recently mentioned, as I said last week, lots of big news, and that was one of them. So I have to sort of see and watch how it plays out. If some of that did go ahead, it would have big effects on multiple parts of the markets, and in bond yields, in REITs, in inflationary numbers, in Fed cuts, in consumer spending. It could have lots of effects across loads of different data sets that we track on the server and that we measure, and obviously we use to feed into what we decide and how we invest and where we invest. I don't know if you guys, somebody weren't expected to talk about anything that you initially have reaction wise to what you might be looking out for, what you might think in terms of the impacts and implications of such a big change like that.
I'll let Will take over from me in a sec, but if I'm honest, like I say, this one actually slipped under my radar. That's why I didn't have this one. I didn't actually see this, so I will have a look into this after. If you can send me that link, George, appreciate it. Sure. But yeah, I don't know too much about this, but yeah, it is very interesting. I appreciate your take on that, because I'll take that away and I'll go and have a read of this. So, Will, you can take over from me if you want, mate.
Yeah, I think you're right, Jordan, that it's going to be very complex, like the pulling and throwing of what actually affects what, and certain things will counter out other things. But in general, I do think that if the mortgage rates came down enough, then house prices would definitely spike up because of the increased demand to buy the houses. There's two other points, though, I just wanted to raise, which are sort of similar to this, is that I did see Trump sort of slip behind the mask about 3-4 weeks ago, because he was asked about buildings and houses and everything, and he basically admitted that he knows that the way to bring down house prices and make it more affordable is to build more houses. Everyone knows that. It's just basic. It's just basic demand and supply. But he also said in that interview, in the short 2-3 minute clip, that he's aware that a lot of older voters are voting Republican. A lot of older voters are effectively got their assets in houses in their house, and if he would build a lot, people would complain. People don't like that. It's the same. It's the same in the UK as well, where people have capital tied up in their house, and they don't want house prices to come down. Like, it's seen as like a constant churn every year. House prices are going to go up 2, 3, 4, 5, 6% every single year. I think in Austin, in Texas, they don't have any rent controls. It's a free market, and they built a shed load of flats and houses, and rents came down and prices came down. So we know it works. So on a nationwide scale, I'm sure that would work. But in actual fact, people wouldn't like it, even though it would become more affordable, if that kind of makes sense, because it would benefit younger people but not benefit older people. So yeah, like the house market is complex, it's complicated. One of a suggestion I saw as well was currently right now, a lot of people in the US don't want to move house because they're locked into super low mortgage rates. They got in like in around 2020, and they've got like 15-20 year term at 2%, 2.5%, 2.8%. So one of the policy I've seen floated about is to mean that they can move their mortgage, because currently if they moved, they would be getting a new mortgage. But I think in Canada, they actually already do this, where you can take your current rate effectively take your mortgage and move it with your new house. So yeah, it's complicated. And also, I mentioned earlier about the fact that Trump did that True Social post about wanting to ban large corporations like Blackstone from buying houses. So that affects building as well, because the builders like being able to sell 100, 200 houses just like that, all to one company, because it makes it really easy. And if they did remove companies like Blackstone, it would remove that price floor. So it may be seen as like a riskier loan from a bank. So yeah, there's a lot going on in the housing sector for sure.
Yeah, so no, I appreciate you bringing those, and I sometimes, like I say, it's good for me to just sit back and listen to you boys chat, because you're always learning from each other, which is good. We'll do another 10 minutes because I know we've all got to jump off for work, so we'll do another 10 minutes, George. So obviously we'll just touch on these quickly of what we've got here. So lads, what do you think of the interest rate decision? So we've got the next FOMC meeting in 16 days. 95% saying we're staying the same. How do you think? Do you think we might get a surprise cut? Do you think we stay the same? Will, where do you think we're at? I know you love this stuff first, mate.
No, I think we'll say the same. I think it's going to be a continuation. I think they'll continue to look for the inflation data, for the jobs data, but I think we're going to be broadly just broadly keeping the same for the next 4 or 5 months until the end of Jerome Powell's term.
I also think the same. I think I've said, not said, but I felt for a while that the sequential rate cuts do need to have a break at some point, unless a Fed chair changes and someone comes in more sort of buddy with Mr. Trump. There's got to be a break at some point, because there's each cut that comes in, there's the constant argument of, are we really seeing inflation numbers do what we want, or are we just doing the rate cuts to try and boost employment, and we sort of feel like we're winning and losing at the same time? So I think a break was coming at some point, and so maybe this will be a break. And I mean, it looks very likely to be at the moment. But we've had a nice run already of rate cuts, and there will still be more to come. So I don't think a break is such a bad thing. But I do think it's inevitable for sure.
Yeah, I think the market's already pricing in here that we stay where we are. I think we see it as well, but I think that's where we're at. Obviously, we've got the market calendar, so we've got a lot going on this month. Let me zoom in a little bit. I don't know how clear that is. So obviously we're up to here. So obviously we've got all the CPI, Supreme Court decision. Again, if people want any of this stuff, in the description, we've got the ebook on the Dropbox. You've got the ebook, you've got all this stuff in, you've got checklists. Obviously, we've still got a lot of stuff going on this month. Now, this one, lads, I was actually interested at, because I thought it would be higher, if I'm honest. I was quite surprised when I seen this at neutral. Crypto's still in fear at 29. So that's that. But the stock market's sitting at neutral on the fear and greed index. What do you think on that, George? Where's your mind at with it?
Yeah, it feels about right. I think there was a lot of fear towards the end of 2025, which I think is natural after long bull runs. People do start to question, can it carry on? Can it keep continuing? I'm not sure if I would have guessed neutral myself. Maybe same as you. Maybe I thought it would have been more to one pole or the other, because things do seem really reactionary in both ways, and maybe that's a reflection of why it says neutral, because there are lots of the opposite ends. There's lots of fear, but there's also lots of greed at the same time, and maybe that's why we're ending up in neutral rather than it being a general consensus that the average person feels neutral. It's just people cancelling each other out.
And
I think it's about right. Yeah, I think Jordan's out it there.
No, that's fair enough. We've got a few last things to touch on. So like I said, we've got a couple of minutes, so we'll touch on these. So obviously, like we spoke about the housing sector, obviously BlackRock stopped. Obviously, it began to drop. Trump bans the institutions from buying single-family homes. Started dropping. Blackstone falls 9%. Obviously, all of a sudden, straight after it rebounds by the 5%. What's your views on this, lads? What do you think? It's all happening one day.
Yeah, I think it's been a theme of this live stream, Jay. It's just we've been talking about news and stuff, and a lot of news does feel big and important in the moment, on the day, in the hour, in the week. But come next week, come tomorrow, come February, a lot of this may not be important at all, because that's just how the news cycle is at the moment. I think that's partly what generates from a president like Trump and how he thinks and how he operates, but also the fact that he goes live what with the media twice a day, most days, at least once a day. So there's a lot of like narrative is out there, like a lot of just stuff gets said, and I'm not saying that, and I'm not saying that's a good or bad thing. I think, well, overall, I think it's good that that he's being like he's being visible and you can hear what he says. But I think these big reactions are just opportunities for us. Like I mentioned right at the start, with maybe SoFi tonight at 1 a.m. or tomorrow on Open. Like, you know, even with the Department of War increasing from 1 trillion to 1.5, and then banning buybacks. Lockheed Martin was a very similar chart to this, went down 5% on the banning buybacks, then increasing the budget back up again. You know, it's just how it is at the moment, I think.
Would you got anything to say on that, George? Or
Would echo the same. I don't have anything particularly to add on Blackstone, but yeah, just super reactionary, lots and lots of movement, lots of volatility, lots of opportunity, and it's sort of a case study example, if you like, of just how the wider market feels, for sure.
Yeah, it's the last thing to touch on before we go on to the poll that I started before. Guy called Charlie, who I follow on X, posts a lot of stuff. He's a very smart guy, does a lot of the charts. This is the S&P 500 sector total return since 1990. As you can see, obviously, energy already. If you look at the last 5 years and so on, energy actually over the last 5 years has dominated more than most sectors, which might be interesting to see, because I thought when I seen this, I thought tech might have been through the roof. It's quite an interesting graph, actually, to be fair. But if you have a look over the last 10 years, tech's absolutely threw off the rails. It's at 653%. What do you think of this, boys? Obviously, I know that you've only seen it straight away and you've got like 3 seconds to look at it, but what's your views on this, Will?
I think it's just highlights just the incredible global changes to our lives over the last 10 years with technology, with Facebook, Instagram, WhatsApp, cloud data, cloud storage, phones, laptops, PC parts. There's so many massive changes. And then since October 2022, AI, ChatGPT, Gemini, these are massive changes. And because we're involved in the stock market, I think we're a bit closer to what's going on and like all these big companies and these big changes. But just taking a step back, like these are huge changes for like the general humankind. And I think it's a great time to be alive. I think it's like a fun thing to be a part of. But yeah, just having technology, just having so many massive returns of massive companies just shows the massive changes which have been happening.
And yourself, George?
I'd offer a slightly different perspective. I think looking at the last 5 years and for energy, I think a big part of that number being the highest is how much it drops in that year of COVID in 2020 and things being shut down. Energy got hit really hard and therefore had quite a quick and big bounce back, which sort of factors into that 185. And then I'd say beyond that, looking at 2023, 2024, 2025, it's not moved much. And I think, to me, that's flagging a little bit of opportunity there, because I think energy as a demand has grown more than those numbers show in terms of how the sector's grown in those 3 years. And the potential and sort of the future outlook has grown more than what those numbers show. So to me, that's flagging a little bit that actually that 185 should probably be higher than what it says in fair value.
No, agreed. And I think, like I say, this is what's so good about having so many different eyes on it. And again, why I flag back to the Discord and why it's so good. Before this stream, lads, I started a poll and 58 people have voted on it. So how will the market end next week? We've got 76% green, 24% red. I've just ended that poll. What do you think, George? Do you think we'll have a red or a green week next week? And we'll come back to this next Sunday.
To be fair, I always guess or prepare for red or bearish times more than bullish, because then it feels more rewarding when the opposite happens. I'm the same. I said to Will before, it's easier after a green week to feel that the next week would be either less green or a little bit red. So if I had to pick one of the two, I'm going to say red, but not because I fully believe it, just because I would rather be wrong in a good week.
Yourself, Will?
Oh, I mean, it's tough, isn't it? I think the credit card news tomorrow as well, not news, like as it breaks in the market, but then Wednesday with the tariff, wow, that's a big one, isn't it? I'm gonna say green. I'm generally positive. I think we'll have a slight green week overall, but I expect volatility, especially in the high beta names for sure.
I'm going to go red as well with Jordan. I'm going to say I'm going to say there's going to be some opportunities this week. I feel like we're going to see some opportunities if the market reacts the way I think it's reacted recently. So I think we'll see some opportunities. I don't think it's going to be a crazy one, but I think maybe we have a bit of a bad week this week. Again, lads, appreciate you both coming on. It's been a good stream. I mean, we could have done this for a lot longer. So I am enjoying them. Obviously, the lads, Will and George, will be joining us a lot more going forward. They are part of the One Big Journey team. And obviously, they're going to be supporting me in this a lot more. Some more exciting adventures that we've got going on this year as well, which we'll say at a later date. Someone's just joined and then said, "Oh, Don, I'm late. You're an hour and a half late." Lads, do you have anything you want to say before we finish?
No, thanks, man. I think it's been a great stream. I'm looking forward to doing more. I've liked covering the news. I think there's a lot going on next week, so it's a good time to be in the server, seeing what the news is, and then just sort of generally seeing what like the overall discussion is as well.
Yeah, and yourself, Jordan, anything before?
Yeah, certainly. Thank you everyone for joining in and looking forward to more in the near future.
Yeah, no, man. Right, yeah, then everybody. Peace out. See you later.